Breaking news right now. Ford reporting fourth quarter results. Let's go to Ashley Webster with the numbers. Ashley.
Well, the actual on earnings per share, Melissa, coming in at 30 cents, just shy of the 32-cent estimate. In fact, Ford warned us about that last week, so it shouldn't come as a huge supply. But on the revenue side, a nice beat, 41 billion as opposed to 36.8 on the estimates. And the automotive segment coming in at 38.7 billion of that. That beat estimates by more than a billion. Just looking at some of the notes here, guys. U.S. market share lower, says Ford, due to car and truck retail performance and lower rentals. We should point out this is a company in the middle of some major restructuring. They announced that they're going to try and cut costs by $25.5 billion by 2022. They've been ditching those slow-selling sedans. They've announced major layoffs in Europe, all part of streamlining the company, going to more towards those, of course, the pickup trucks, those areas where they've done very well. But also we should mention the tariffs and the China. They say that the tariffs could dent profits by $700 million, guys, this year if the trade stuff does not get sorted out.
Wow. Ashley, okay, thank you.
Sure.
Here now, first on Fox, Ford CFO Bob Shanks to talk a little bit more about this. Good to see you, Bob. Now, as Ashley said in giving those numbers, some of this we knew about, what you did in the fourth quarter. So I want to try to focus exclusively on the future, if we can, for the full year, for 2019. I know there are challenges out there, China, Europe, even some in the United States. How do you expect to do? I believe the street consensus is $1.29 a share. Now, you earned $1.30 a share last year, which is $7 billion. So will you earn more than that this year or less than that?
Well, what we talked about last week is that we expect the business to have the opportunity to improve in 2019 versus 2018, and the improvement should come from the same areas that actually drove the decline in 2018. So that would be China, it would be Europe, and also North America.
So you'll earn more than $1.30 a share next year?
We've not provided any specific guidance on EPS, but if you look at all of our top-line metrics, our capital and cost efficiency metrics, as well as cash conversion and our balance sheet metrics, we expect all of those to have the opportunity to be on the upside in 2019 versus 2018.
Let me pick apart some of those areas that you mentioned, one being obviously China, which is a challenge. But you say that it could change. Are you assuming that there's going to be a trade deal done? What's the outlook in China?
Well, we are assuming that there's a continuation of the tariffs that we've kind of endured over the last number of months, although we'll have to wait and see how that all pans out pending the negotiations that are underway. A lot of the issues that we faced in 2018 were actually very Ford-specific, so it's in our control to address those issues, particularly around dealer engagement, the age of our product portfolio, how we go to market, and so forth. And we think we're on top of that and expect to see improvements as the year progresses in 2019.
To that point about Ford-specific issues, you're obviously compared to General Motors, and General Motors recently raising its forecast, and the critics will look at that and say, boy, they're getting their costs under control. They're doing a better job of executing than Ford is. Why can't Ford be more like General Motors? What do you say?
Well, Ford's Ford, and we've got a very specific point of view around the things that we need to do, particularly to improve the businesses outside of North America. And we've got, in fact, in early January, we announced the start of consultations to redesign the business in Europe with trade unions and with workers' councils. So that's the first effort that we'll be talking about this year, with more to come.
Okay. As a final point, we mentioned China. I know Europe's a challenge. Brexit is certainly something that you're looking at closely. But what about North America? What about, in particular, the United States market? Are we in an auto recession here in the United States? What's your view on the U.S.?
Yeah, we don't see any sign of that. We certainly expect to see a deceleration of growth of GDP in 2019. We also expect the auto industry to be somewhat lower than what it was in 2018, but still at very, very healthy levels. And when we look at all the consumer credit metrics at Ford Credit, everything looks good on the consumer side. So we think we'll still see solid performance in 2019 in North America.
No auto recession. Bob, thanks. Good to see you. Bob Shanks from Ford.
Yeah, thank you.
All right.